What's up, everybody, and welcome to this week's small carrier market update. I'm going to go dig into some trends that we're seeing. A few changes, not many, but I'm just going to go ahead and dive in and give you some insight on what we're seeing, specifically on the small carrier side, so that way you can operate with intent and be sure that you have an idea on what's happening in the marketplace. And I really wanted to take a time today and really share some of that news with you. So we always start with the true metric of how much freight is ending up spilling onto the spot market, which means the outbound tender rejection index. Right now, we're not seeing that lift. I mean, obviously, we have a little uptick, which barely a little, but I guess when you're moving in a vertical direction, anything is positive. Right now, we want to say that shippers are still in control when it comes down to that because we're only seeing 6.17% of overall freight spill back over in terms into the actual spot market itself. You got about a 93.5% acceptance rate when it comes down to rejection. So you're starting to see that. So I don't expect to see brokers to chase you with high paying loads and your phones to be blowing up at this moment. But again, a little uptick is definitely good. I hate to give you the probably the catalyst to that had to do with the holidays. So what we'll have to see is what happens in the next week when it comes down to it. So coming out of Labor Day, obviously Labor Day being one of those holidays that is obviously one of those ones where it would generate that for. We got to keep our eyes on it. When we look at overall volumes, obviously volumes are not moving the way we want to move moving into September as we move into the back half of the year. Anytime that you look at volume, less freight, and when you have more trucks, it means weaker leverage for you. So right now we're still in that soft demand cycle, sitting at 10.2, weekend of the month. Obviously, we didn't get that sure that we had an idea on what we're looking at from a volume standpoint. And lower volume always means more trucks chasing the fewer loads. I don't see that seasonal strength that came out of the Labor Day weekend. Capacity still continues to outweigh demand, so we're still driven heavily by that. When I look at the National Truckload Index or the NTI, man, this thing has been flat for the last minute. We're at 231. It's holding there. We have no big changes of it. It's been around 230, 231, around anywhere between that 225, 228 mark for quite some time. So really not seeing a big lift there. It's almost like the new normal. The market saw a little curve back. And it's obviously we haven't had any of that late June feel where we're sitting at that 250 mark in some places. But man, it's just been a struggle. That NTI has just been a struggle, and I think that we'll see more of that as we move to the back half of the year. And I'm gonna share the reason why I expect that. So it really doesn't give you a whole lot of plan time to be able to plan. So 231 is where you're sitting at your overall spot rate. One of the things that we saw as a positive is that diesel fuel is trickling down. We're now at a 370 right now, which is down from that peak earlier in the summertime. We're sitting around 380 and it was climbing, especially coming out of June, that big spike from June. We're not at 345 where we were at the midpoint of June, but coming down from 380 is still at least moving in a positive direction. Obviously, in those West Coast markets, Northeast, you're still seeing higher than average. Obviously, those are the areas that you're going to expect to pay more, but at least you get an idea that we're starting to see a little bit of a change and first a decline as it comes to overall diesel fuel. Our hope is that it continues to rescind so we can get down into some more relief there. Now, this is the big change that I'm sure you're delighted to see is the overall spot rate changes over the last 4 days. Now, remember, a lot of this is driven by Labor Day, so I wouldn't get my hopes up too high, but at least it tells us that we got some markets right now that are positive for us, right? So we've got markets that we can actually kind of move out of for the next couple of days at least until we start seeing capacity and things start to level off in these areas. It's definitely not all the reds you saw last week, but we're showing a lot more blue. We got a lot more areas that have an increased amount of overall freight volumes, but also an increase in overall rates. So just be very, very mindful that this is holiday related, but at least it gives you a kind of a picture on where the freight market price is at and where you can kind of position as you go forward. So keep an eye on this. Next week, obviously, is going to be different. It's going to be more of a telltale sign. So I'm more excited to go ahead and get into it with you. Now, the reefer market is one thing that it's starting to get a little bit of legs behind it, right? So reefer rejections rose to 13.49, which is obviously one of the highest points that we've seen. we're also seeing some tight capacity showcasing in that. So even as we go towards the back half of the year, reefer starts picking up during this harvest point of the year. So we start seeing more of those outbound tender rejections. We also see more of those higher NTIs when it comes through it. So I think that this is one thing that we want to watch as we move to the back half of the years on the reefer side. NTI or RTI, which is a reefer truckload index, is showing the signs of life. To a mile, which is holding steady week over week, which is definitely good. And we've climbed out of that 245 dip. So starting to see a soft climb out of August. It's been a gradual climb up from the beginning of August to now. And we're continuously seeing that climb. And if you compare it to last year and compare it to what we kind of expect in September and in October, we probably should see around, I'm hoping that we start seeing around that 270. I'm gonna knock on wood here and say that we're gonna see that. Now, what you want to expect is right there before November, you're going to have a dip, but then as you go into November, you'll see another increase for it, hoping that we see that $2.90 and $3 that we saw right at the beginning of the new year into the beginning of February. We're just going to keep our eyes on it. And it's actually been trending upward for about a month now, which is obviously a good sign. It's not what we saw in January, but seeing that trend moving in the opposite direction is something to be positive about and starting to look at that.
The super successful people are part of the 1%. They're part of that very, very small percentage. That's why I don't want you to do things that everybody's doing. I want you to do the small things that nobody else is doing. The people that are most successful in this business treat it like it's the only thing that's bringing income into their household. If you do that, then you'll have the same results. The people that I see most successful in this business operate like they have no other chance. They have nothing else going. This is the only breadwinner that they have in play. I'm Adam Wingfield, and this is the Freight Waste Playbook.
Also, just like the last small market update, I wanted to give you the logistics manager index, which is the LMI. It gives you the opportunity to see where inventory levels fell. This week, a little differently, I wanted to show you a 5-year view versus the 1-year view. So that way you can compare to where inventory levels were and where overall spot rates were at the same time and overall volumes were at the same time as well. We're at 55.6 on that. So when we talk about where the inventory levels are, they are in a drop-off phase. We haven't seen this period at 55 since about April. So having those inventory levels there are telling us what retailers have already told us. They've told us that they're not overstocking ahead of Q4. We also saw on some of the articles that have already been posted that retailers are pulling back as far as inventory spend. So I would say that we're probably not going to see a demand surge from the retail side of things unless, and here's the tricky part of it, unless there's a demand change that causes that. So something really, really close to watch. Retailers are really, really, really kind of setting back themselves due to tariffs and things of that nature. So I don't want to call anything really early in that. But right now, we don't have anything that's going to give us a strong sign for the back half of the year. And when you don't have retail kind of pushing you towards the back half of the year, that's obviously not a good sign. Obviously, I want to be very, very honest with you. I'm going to give you the information as I see it. If you compare it to last year and you look back at last year around the end of the year, we were in the 45 range out of October, but then we surged right towards the end of the year between the holiday period and moving into the beginning of the next year. My biggest concern, obviously, is that when you pull back inventory and you're not ordering more inventory, you don't need trucks to move that inventory, and you're not removing the capacity off of a lane to associate a load to a truck. That's where my concern comes around. So I would want to watch this very, very closely. I want to watch inventory levels very, very closely. I also wanted to give you a 5-year view of carrier net authority changes. I've been seeing things float around the internet, and I've been seeing some tweets and charts where people's like, oh man, we had, 30,000 new carriers this year and things of that nature being added. But the most important number that you've got to be mindful of is that net. You can add 30,000 carriers, but if you take away 29,999, you only added one carrier to your capacity count. So when we look at overall capacity counts now, we're only up about 22. So we've been continuously bleeding off capacity. We've had times this year where we lost a lot of capacity leading into the year. We've had times where we lost 500 or more in a month period in terms of capacity. So it's something to watch. We have very few new carriers entering the game. And when I say entering, I have to calculate that based on carriers that are exiting too. So we have many still exiting. It's a little slower rate. So we're getting a little bit of stabilization. A lot of carriers are able to kind of adapt to the new norm. And, shout out to you if you're able to really kind of get down into it, hunker down and stay moving. Your competition is starting to slow down a lot when it comes down to that. So as we move to the back half of the year and we move into Q4, which you obviously know that December time, November, December, we usually typically see a lot more exits during that time of the year. Something for us to keep an eye out for. But I wanted to give you an actual viewpoint on how many carriers have truly been added to the marketplace, and we're not seeing that huge number that is floating around there. So something that's to keep a watch out for. And then I wanted to throw in your inbound TEUs. This is inbound freight coming into the United States. Now, obviously, you can see when you saw that July and August peak, you see that we've really tailed off almost in half when it comes down to it. We had a slight increase week over week, but man, it's just a continuous downward trend. I think that peak import season is also behind us. And what that does is that it kind of just navigates how much freight is trickling inbound for us. The fewer inland loads that we've seen over the last 35, 40 days-ish, as we saw it to start to continue to decline, is something to keep a watch out for. And that demand, that weak consumer demand is showing up. And these are the things that really, really drive freight volumes. And it also drive tender rejections as well. So these are the two things that go hand in hand. We want to look at the logistic managers index when we're starting to see what retail volume looks like and as overall what that stock looks like. And then we want to look at what inbound, because all of this stuff drives freight to the dock. And when it drives freight to the dock, it requires a truck to bump the dock. And the more freight that we bring to the dock, the more trucks we need to bump to the dock, and the higher demand that we are in for trucks at the dock. So this is just a little bit of data that I wanted to kind of share with you as we move forward. So thank you for joining us this week. Next week, we're going to dig back into the map, because I think that that's going to give us a different picture when we look at the map next week. We also should get a better LMI next week when we get the end of the month results next week. So hopefully starting to see things kind of tail out and really get an opportunity to see what's going to happen for the remainder of September. Until then, I want you to make sure that you be very, very intentional on where you position your trucks, be intentional on how you're spending on fuel, and I hope to see you on next week. Take care.